Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicator Explained, we will be looking at the concept, the properties, the uses of a interesting indicator known as a linear regression indicator. This is an indicator which, if you look at it, would definitely look like a moving average, but this is a indicator which is a lot different compared to the moving average. This is this is formed using the linear regression channel. If you are aware with the basic concept of the linear regression, I mean in a mathematical term, then it's very easy for you to understand this indicator. Or else, even if you don't come from a particularly mathematical background, you can easily understand it. You can do a quick search of the uh, you can do a quick search on the internet and you will get to know the exact formula of the linear regression. So I won't be going into the formula of the linear regression. Rather, we will concern ourselves with the concept, not concept, but the actual uses and the ways to customize this indicator to make sure that it works to our advantage. So for that, all we have to do is go to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. Here I have added the linear regression indicator with the default calculation period of 14. If you want to know where it is listed, it is included amongst. Okay, here it comes. Price no, it is included under the statistical functions, linear regression. Okay, now coming to the customization options and some of the possible uses of this indicator. The indicator takes into account what should have been the linear regression value at that point in time after the calculation period. Suppose if we draw the linear regression channel of last 14 candles, then that channel's endpoint would have been here if we had done the plotting, and prior to that the prior 14 candle periods calculation of the linear regression would have ended here. So for each individual candle period, these values are plotted, then those values are simply co-joined to arrive at this line which is looking like a moving average of the price. But there is advantage to these indicators output compared to the moving average, as this is the output value based on the anticipation of where the price should be based on the prior data rather than the price following moving averages. So this is working in anticipation of the possible moves. So that is one interesting phenomena, one interesting difference compared to the moving averages of various types. Now, at this point in time, as we have this output value pointing upwards, and for pointing upward, even if we take it as a individual value and simply look at the prior values, then we get the idea that for last couple of candle periods, the momentum is quite strong in the sense that we have these linear regression values also climbing up. So if we then formulate our strategy while keeping this concept and the underlying assumptions in mind, we will have a good chance of making money. As you can notice that most of the time, these indicators output follows closely with the price action, and at the same time, it is much smoother to what you can expect in terms of the other indicators, particularly so for the case of moving averages, which tend to be topsy-turvy or very range bound depending on what kind of volatility you have for the underlying instrument. But this indicator tries to overcome some of those drawbacks and tries to go with price formation at the same time being reliable enough. So the basic use, as I said, is kind of simple. If we have the output of the last candle close above the output of the linear regression, then I think that is has to be considered as the bullish from the point of view of the linear regression indicator. And if we have the closing value which is below the linear regression, then that has to be considered bearish. We don't really have to look at the actual distance from the linear regression output, as this indicator simply joins the two discrete values at the interval of one candle period. So we don't have to pay much attention to how this line is shaping up. Even if we simply look at the closing value and compare it with its linear regression's output value, we will be in position to judge for just for the momentum of the underlying instrument. So this indicator then becomes pretty much more responsive. And if you feel that in the scenario where the price action is rather muted, in those kind of scenarios we will get to have this development where one candle will close above the linear regression output, and maybe in the very next candle period we will have the closing value on the below on the lower side of the linear regression. So that's something we have to work with. And and that is why many people feel that if we simply add one more condition of how the past values of linear regression are shaping up, maybe that will give you a better idea. Yeah, that can be done. So that is going to make it less responsive, and only when we have significant price move we will have this then linear regression output, and this trajectory changing course. So that is something which we have to live with, we have to work with. So this is more of an trade-off where we have to decide if we want the strategy which we are working with to be more responsive to the immediate price fluctuations, or if we want stability, and only when there is sustained price move we have to then decide our course of action. So these two factors are also applied for these indicators use. Now let's see what are the customization options available on the platform. The input value, we get the price point to define as per our requirement. We can use this close price, open price, high price, low price, or median price, typical price, weighted close price. So all these kinds of applied prices are permissible with this platform. And as you can pay attention to this plotting of the linear regression, as I'm changing the applied price, we are seeing significant change, significant impact of these indicators output value, and it is changing course. So depending on what kind of applied price you use, we have this formation which is changing course, and we have to decide in what circumstances what applied price works best, and then depending on that you can set up your strategy to trade with this indicator. You can also increase or decrease the calculation period. So here if we want to lower it, we can lower the calculation period to say 7. Now it is much more responsive to what we were looking at earlier. Here we have it, and it is following closely the price action. Now if I increase the calculation period, it is not going to follow the price action that closely. Suppose for example if we go for 24 and say close price as the applied price, you will see that depending on what kind of trajectory would have been formed if we had the linear regression calculated for 24 hours, then those output values or join to arrive at this indicator. So we have a lot more stability, but at the same time, it is not running far off from the actual price, actual of each candle. So this is trying to follow the price action as closely as possible. And with that, it is then also giving us stability, good enough stability. So both these functions are being satisfied. And as I said earlier, also you can have this plotting with the extended candle period, but in that case, it becomes very important to understand this kind of relation where if we are weighing our options and deciding to give weight to the trajectory of the linear regression output, in that case, we will have to also consider where exactly the close is happening. So this relation will have to be kept in mind, and then decisions will have to be taken accordingly. Now let me restore it back to initial default period of 14. Coming to the output can be varied only in terms of the color. There is nothing else you can do. Now if we want to have brighter shades, we can go for that. Styling can also be changed. You can go for different types of styling combination. Width can be increased or decreased. Levels we have low. We don't really have any level to be defined. If we want to add this, it is going to be very difficult, as it is going to be very difficult for us to define any level in this kind of scenario where the indicator's output is rather unbounded. It is only bounded by the price of the underlying instrument, nothing else. So we don't really need this. Coming to the advanced calculation, if we have to work with this indicator in a stable manner, then in this case, if you opt for this option, the output is going to remain fixed throughout the current candle period, and that's why that option becomes useful in particularly so in indicators where the current applied price fluctuation can lead to large variation in the output of the indicator as well. Highlight the time period zone. Whatever is your calculation period can also be highlighted, and it makes it easier for you to keep in mind what is the calculation period you're using. Calculate from custom data. The instrument can be further customized. We have this option where this indicator can be used with almost all of the instruments available on the platform. You can use it for forex, commodities, indices, individual stocks. So all those options are there. For example, if you go into the commodity section and add the light crude oils to the chart, you will have this indicator then giving you the idea of the trend using the concept of linear regression. So this indicator, as I said, is going to work with almost all of the instruments available on the platform. Okay. Now let me restore it back to USD JPY. Calculate from custom data. You can customize the indicators calculation further. You can use it use from the chart. We have opted for this option. Candle period can be same as from the chart, or you can vary it. Suppose, for example, you want the indicator's output value to be derived using the candle period of half an hour each, even though we are using that output on hourly time frame. We can do that. So here this linear regression output has been calculated while keeping each candle of 30 minutes each for the total calculation period of 14, and then that has been added, or you can say plotted, on this hourly candle period chart. So this is one interesting option given on the platform. Spread side can be ask or bid. So we have two options provided to us. Then indicator can be available on all the time frames, or you can specify on which time frame you want this indicator to be available, and only on that time frame this indicator will be available. Suppose if I want it on 5 minutes and hourly only, then this indicator will be available only on those two time frames. And if I then want to change it to say another candle period, I won't be having the indicator plotted. So this is a major difference. Now here there is no plotting, but if I revert back to the hourly, here again we see the linear regression appearing. Alright. So with this option we are almost done for the day and for the week. As I'm wrapping up the session, I'm now we are in Friday's session, so it's time to get ready for the party. And I hope most of the traders had a fabulous week, and those who didn't really have a fabulous week, maybe next week will be better. So let's hope for the best coming ahead. See you on Monday.